Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. AI trade wobbles. Asian equities pairing gains as tech loses momentum, with Korea reversing sharply. Oil whipsaws as flows through the Strait of Hormuz persist, and OPEC Plus signals higher supplies. And President Trump heads to Turkey after calls with Putin and Zelenskyy. Ukraine, Russia, and defense spending set to dominate the agenda. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Happy Monday. It looks like a happy Monday for U.S. futures this morning, pointing to probably a positive session in the S&P 500 later today. We're seeing U.S. futures 0.2% higher. We're looking at some individual names here. NVIDIA is one of them. Its server assembly partner, Hon Hai, had reported stronger than expected sales, a 40% jump in quarterly sales, showing AI demand is still alive and well. They also said that shipments of AI racks are expected to maintain momentum. This is after a rough couple of days, or the rout that we saw in tech stocks across the continents, both in Asia and in the United States. And speaking of Asia, we're seeing the MSCI Asia Pacific down 0.3%. Now, it had gained as much as 3%, and it had lost as much as 3% in the session. So we're keeping an eye out on those names. But now we flipped the board and we're taking a look at the chart that we've chosen today. And we're titling it Warsh Scores Early Wins on Inflation. And what this chart essentially is showing is the short end break-evens. They dropped below 2% on the 2-year break-even rates. And this is noteworthy because it is the bottom of a 5-year range, and it's happening in the midst of this boom that we're seeing overall in stocks and tech investments, and with the U.S. labor market in flux from the impact of AI and energy crisis rapidly being left in the review mirror. We're keeping an eye out on a sign on this as a sign that a cut may come back in the Fed's playbook. So something to keep an eye out along with those hawkish tilts that we've been monitoring from the Federal Reserve over the past few weeks or so. Now, for the weaknesses that we're seeing across Asia this morning, we've got Avril Hong in Singapore for us. Avril, what do you have for us?
Yeah, we're seeing Asia stocks, despite being in a good mood early Monday morning and extending a rebound we saw from Friday, so more or less in line with U.S. stock futures. The mood has soured as the session progresses, and I think that speaks to investors' lingering concerns of whether this AI rally has gone too far. And these AI players are under a lot of pressure to show that their heavy spending is translating into profits. You're seeing consolidation among some of these names ahead of the earnings season. We, of course, have Samsung Electronics tomorrow, and this is a stock that has risen 150+% so far this year. Even SK Hynix, another star memory player, is a bit under pressure today, and this is coming ahead of its US ADR's kickoff on Friday. Now, aside from the AI trade, just highlighting what we're seeing in the Japanese currency as well, you have some of these more bearish forecasts now coming through from the likes of Goldman Sachs, and now it sees 165 versus its previous forecast of 155 on dollar yen, and this is against a backdrop of higher for longer US yields, it sees, as well as the slow pace of BOJ hikes at a time where there are fiscal pressures in Japan. So these factors, it thinks, support the case for continued depreciation in the yen, even though it remains undervalued. Abir?
All right, Avril, keeping an eye out on those market details and the individual names, SK Hynix and Samsung. Now, returning to the oil story, oil prices fluctuate after 2 days of gains as crude markets sway resilient flows through the Strait of Hormuz. Major OPEC Plus members also agreed to another modest increase in their collective oil production quotas for next month, adding to the prospect of more supply eventually hitting the market if a U.S.-Iran peace pact can stick. For more on this story, we're now joined by Stephen Stupczynski, Bloomberg's Asia Energy team leader. Stephen, good to have you on. OPEC Plus is sticking to its plan to raise output by next month, essentially adding more supply, when the market is really worried about an oversupply glut. What is the latest there?
You know, I mean, it's an interesting move. Obviously, they want to capture more of that market share. They want to be able to bring output back, and they don't want to do anything that could potentially hamstring them from increasing their production back to levels where they were before and get those customers back. Now, there is an interesting thing happening in the market. Now, I sit in Asia, I sit in Singapore. Asian customers had spent the last 3 or 4 months preparing, replacing supply from the Middle East because they weren't sure when or if Hormuz was going to open anytime soon. And so now with a lot of ships leaving the region, with Saudi Arabia, their output rising back near pre-war levels, with Kuwait also jumping back, and with Iran getting waivers from the U.S. to sell their sanctioned oil, you're seeing a market where the sellers aren't really finding any near-term buyers. The buyers are well-stocked, and so right now you're seeing them kind of offer shipments at a discount, adding to this idea that, at least in the immediate term, there is a bit of an oversupply, a bit of a glut, as the market tries to digest it. And instead of OPEC Plus course correcting, they are adding more supply back in, indicating that they're not going to be backing down. And despite their main customers being pretty well stocked, they are pushing forward with lifting that production, especially when Hormuz does fully open.
And Stephen, just speaking of Hormuz, are we seeing a recovery in the traffic of tankers and shipments across the strait, or are we seeing signals of operators still treading a little bit cautiously?
You know, it's been a weird weekend because there was one day early in the weekend where you saw a lot of ships U-turning. They were taking the Omani route, and there have been reports of Iranian radio signals saying, hey, you know, if you're not taking our route, you're not allowed to do that. You have to get permission. There's a lot of inconsistencies. There's a lot of information out there, and there are still fears. But then on Sunday, we saw a number of ships kind of go through the Omani route again, and you saw at least six oil and gas tankers go through on Sunday after many ships had done a U-turn just 24 hours before. So it's sort of a start again, stop again situation. There is certainly a lot of caution, but there are a lot of signs showing that traffic is sort of increasing again. We are not at pre-war levels, right? When we talk about ships going through, we're not at the levels of 140 ships per day that we were in February. We're talking, you know, including ships that are going through dark and including non-oil ships, maybe 20, 30 ships per day. Last week or the week before, we were at 60 ships. You know, we're not really at the sustained pre-war level, but there are signs of a recovery. You are seeing at least a lot of Iranian flows get through, and you are seeing the producers get their ships out of the Persian Gulf to their customers.
All right, Stephen, we're going to have to leave it there. Stephen Stepchinsky, who leads our Asia energy coverage on the latest on Hormuz. Now, Israeli Prime Minister Benjamin Netanyahu says he and President Trump have agreed to meet in the U.S. in the near future. The pair last met in person in February before the strike on Iran. And since then, the leaders have diverged on how to end the conflict. But Netanyahu told Fox News he remains resolute that Iran will not have nuclear weapons.
Deal or no deal, as long as I'm Prime Minister, Iran will not have nuclear weapons. We've been very lucky that President Trump is leading the United States, leading the free world in this common effort. And believe me, if I have things that I want to point out to him and bring my own opinions, I do so in a free way. And when he has things he wants to tell me, he does that in a free way too. That's what friends and allies do with each other.
Joining me now to discuss is Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, you just heard what Prime Minister Netanyahu said about what it means for Iran to have a nuclear weapon, or what it doesn't mean for Iran to have a nuclear weapon. There's divergence between him and the United States. What does it mean for the near-term future of the negotiations?
So, I mean, I presume he's going to go into this meeting. Now, they haven't said exactly what's on the agenda, but I think we can make some reasonable assumptions that number one will be for the US to take a much tougher line in negotiations. But I think that is going to be the most problematic in the sense that it's pretty clear that the US has limited capacity here to do that, particularly with regard to Hormuz that we just spoke about, and secondarily, that Israel reserves the right to continue its operations in South Lebanon, which again Iran has made clear is a red line for it. So I think this relationship has changed somewhat, particularly since February, that fateful meeting in the Situation Room. And we know it's got quite testy in the last several weeks in terms of this divergence between policies. So I think to some extent it's going to set the tone going forward for what exactly this relationship is going to look like.
And just speaking of Iran, over the weekend we witnessed the funeral of the late supreme leader in Tehran, and some surprise delegates, but also some missing people. What can you tell us about the process over the weekend and into the next couple of days?
Yeah, so I mean, I think in terms of the ones that showed up, there were ones that are less surprising, like China and Russia. You know, we know they've been reasonable allies now for some time. I thought what was kind of interesting is that Qatar, Oman and Saudi Arabia sent representatives. That, to me, speaks to an attempt to kind of reform some sort of relationship. Again, not to pretend that, they're the best of friends. Again, clearly they're not. But perhaps a little bit of reality that, you can't change geography. You're going to have this neighbour whether you like it or not, and you have to make the most of it. You have to have some sort of relationship. So that was kind of interesting. And then this is going to go on, I think, for the better part of a week. And it would appear that both sides have agreed, per Trump, to suspend any hostilities over that period. So, again, we'll see what comes out of the talks as they resume after that week.
All right, we'll see what comes out after the funeral then. Stuart, thank you as always. Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa and Russia. Now, coming up, the rebound in Asian chip and tech stocks loses momentum. We'll discuss the market outlook with Gareth Nicholson from Fab Asset Management next. This is Bloomberg. Asian equities swung to a loss and U.S. stock futures paired gains. This is as a rebound in regional semiconductor and technology stocks lost momentum. Joining us now is Gareth Nicholson, Fab Asset Management CIO, to discuss more. Gareth, good to have you on. I was prepping my questions in the morning with the outlook of things in the green, and then very quickly before in Asia, things turned red quite quickly. What is happening? Are we seeing a rotation? Are we seeing consolidation ahead of the earnings season?
Well, I think that's it. There's earnings is the key one. When if you think about the story, there's three actors. One is equity, and AI is driving that. And it's been priced to perfection so much that any mishap on earnings, on headlines, on IPOs that's coming out, that's causing massive rebounds. Now, normally that is protected a little bit by the rates, but we're not sure what's happening with rates. With the new Fed chair, is it going up? Is it going to stay where it is? We're pretty certain it's not going to get cut. But then we had a shock happening with the non-farm payrolls on Friday. So many different actors are in the place there. And then you've got the bad guy, which is inflation, oil. So it's pretty tricky. But I think at the moment, everyone's eyes are on earnings. That's going to be the next one.
Cool. And I want to return to the Fed. But before that, we've seen over the past couple of weeks across the board really a broadening in the bull market, if you were. We've seen a rotation outside of AI, not just outside of semiconductors. We've seen several movements there. But do you think that this is a healthy run into other sectors, or do you think we're seeing the start of something fundamentally different?
I definitely think it's a bit of both. I definitely think it's healthy. As it broadens into the rest of the market, we're going to get more sticky money. When things are extremely expensive, as we said, you can get the pullbacks. But when you start moving into other parts of the market, EM, you've seen Japan getting good inflows. You're seeing other parts of the semiconductor industry, so the secondary derivatives. These are all constructive for a more stable environment. Because if it's all just in those top seven or just in memory and on compute, it's very, very, very sensitive to any news. So for us, broadening is better. We think also you're not really getting paid to go into some of the other asset classes, so they're staying in equity. You're not getting paid for duration. You're not getting paid for credit. So fixed income is a tough space to be in at the moment. So, yeah, we think broadening is good.
And so when we talk about the Fed, and what does Kevin Warsh decide to do? What does he decide to do?
Well, if I knew that exactly, then I'd probably be on a beach somewhere drinking cocktails. But realistically, he's got a few options, right? If oil stays high like this, he has to keep an eye on inflation. And I think that's what his last meetings was highlighting, that with inflation remaining higher, the Fed is priced for a hike. Still some time, maybe later this year. For a cut, only next year, probably the end of next year, more like third quarter. So in between, when they're not certain, they stand still. And I think the non-farm payrolls of 57K on Friday, that gives him a bit of breathing room because the market isn't as strong as they thought. Inflation is kind of coming down a little bit, up and down. So most likely they're going to stay stable at these levels, which is still pretty high, but still constructive enough for equity to keep going up.
Okay. And then, Gareth, if we were sat here 6 months from now, what do you think we'll be looking at? Or what do you think markets would have mispriced? Do you think it's the AI game? Do you think it's geopolitics? I feel like we stopped talking about the geopolitics for the time being. What do you think would it be? Or a Fed, or a mistake by monetary policy?
Thanks for putting that out. I think that's probably the most likely is going to be some sort of central bank policy error. The central banks have so many different people pulling them at different parts. So they have to worry for inflation, they have to worry about growth, they have to worry about politics, midterms are coming up. There is a lot of dislocation between different central banks. So Europe is on a slightly different path than UK. So there is a potential that we're going to get a policy error. And markets are so sensitive to any change. So with rates really low, with credit really low, if central banks make any move that isn't what the markets expect, they're just going to punish them. So for in 6 months' time, I think you're likely to see the curve steeper. You're likely to see fixed income struggling. And the Fed is going to have to try slow that down, but it's not going to be easy for them.
And just speaking of the elephant in the room, I was taking a look at your notes earlier. You said, I don't want to misquote you, geopolitics, don't declare victory. Do you think the market is mispricing this whole deal? Do you think this could unravel really quickly?
I think what the market does is it front runs. The market, you get paid for thinking far ahead. So it's basically priced in everything's 100%. And I think we've seen, especially being in the region, it's 2 steps forward, 1 step back, 2 steps forward, 1 step back. So there will be 1 step back. It's going to happen. We need to, as investors, be prudent. We need to look after the money. We need to have some diversification, some things like gold, some things like real assets, to also protect some of the things like equities, which parts will still go up.
All right, Gareth, thank you for your time ahead of your vacation as well. Gareth Nicholson, Fab Asset Management CIO, with the latest on those moves. Now, NVIDIA's server assembly partner Hon Hai has reported an earnings beat in the second quarter. Revenue jumped 40% to nearly $80 billion due to demand for AI-related products. The company says shipments of AI racks are expected to maintain momentum, and demand for information and communications technology products is entering peak season. And South Korean chipmaker SK Hynix, $29 billion U.S. listing on the Nasdaq this week, will give American investors direct access to its AI memory chip business. The move aims to raise capital for factory expansions and close the company's long-standing valuation gap with its U.S. rival Micron Technology. And coming up, more and more South African businesses are switching to renewables to save money and ensure power supplies. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Businesses in South Africa are taking advantage of market reforms and investing billions of rands in renewable energy. They're doing this to protect against blackouts and steep price increases that have exposed the risks of relying solely on state-owned power utility, Eskom, and deteriorating municipal distribution networks. For more on this story, our Chief Africa correspondent Jennifer Sapasaja joins us now from Johannesburg. Jen, good to have you on. Just how much easier is it for South African companies to get reliable and affordable power today than it was in the past?
Yeah, Beer, good morning to you. It is significantly easier, and we have to remember that South Africans for decades had been relying on this monopoly, state-owned monopoly, which you were mentioning, Eskom. That led to, as we've reported for years, blackouts, rolling blackouts for a number of companies and private individuals, which really hampered any sort of economic growth. And a number of economists have pointed to that as being sort of really the detriment to this economy. And so now what we have been seeing, what you were just mentioning there, we're seeing more and more companies and private individuals relying on a more liberalized market. It's become more liberalized after some of these reforms were introduced back in 2021. And so not only is it easier to access some of these power sources, it's also more cost effective. Just to give you a few numbers there, we've seen Eskom's prices actually climb nearly 900% since 2008. If you compare that to solar power, we've seen solar power which can cost between 50 to 60 cents per kilowatt hour, and so significantly cheaper for a number of these companies. It also then provides businesses with a lot more flexibility. They're not necessarily relying on just one state-owned power utility to tell them when they will and won't have power. And maybe most critically, it's provided a bit of an inflation hedge and price certainty for a number of these companies. So really this transition to renewables has been a bit of a game changer for South Africa.
And Jen, just how has Eskom responded to this challenge, this competition from private renewables?
It has been a challenge. The company has acknowledged that, Abir, especially in some of the reporting and as we've reached out to them. It's really eroded demand and potentially it has opened up then opportunities for them to at least make demand in their own offerings a bit more consistent than we've seen in the past. But because it's eroded some of their demand, they've seen declining revenue. And what the company is actually describing now is what they say a death spiral. And so they have actually launched what they call Eskom Green, which from their perspective, it's a utility scale renewable energy developer meant to adapt to the competitive market. They say potentially it offers an alternative to what we're seeing. They have ambitions to have 6,000 megawatts of capacity by the end of the decade. But as we've just been speaking about, a number of companies and private individuals are turning to their own sources. So it's unclear what that competition is going to look like over the next few years. I can just tell you anecdotally, South Africans, though, are much more pleased that they actually have power to turn to and reliable power to turn to when they wake up every day.
All right, Jennifer, keeping an eye out for these stories. Jennifer Sapsaja, our chief Africa correspondent in Johannesburg. Now, Nigeria has accused the South African authorities of criminal liability in the deaths of 3 of its citizens. The Nigerian Foreign Ministry accused the police of killing a Nigerian national using gruesome interrogation techniques and of the extrajudicial killing of another Nigerian. A South African police spokesperson did not immediately return a call seeking comment. Now, coming up, Zeina, Rizk, co-head of fixed income at Amwal Capital Partners, will be giving us her take on the latest developments on fixed income in the region. That is coming up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. AI trade wobbles, Asian equities pairing gains as tech loses momentum, with Korea reversing sharply. Oil whipsaws as flows through the Strait of Hormuz persist, and OPEC Plus signals higher supplies. And President Trump heads to Turkey after calls with Putin and Zelenskyy. Ukraine, Russia, and defense spending set to dominate the agenda. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's take a quick look at where markets are. Surprising that MSCI Asia Pacific is now trading sideways. It was losing a little bit earlier. But when we look at U.S. futures, 0.3% higher. They're pointing to a positive start in the S&P 500 later today. Now, just something to note is that the S&P was closed on Friday for the July 4th holiday or ahead of that. And so we're seeing volumes return to the S&P today. Again, a positive indicator from futures. We're keeping an eye on a few names. NVIDIA is one of them. The server assembly partner of NVIDIA, Hon Hai, had reported stronger than expected sales, 40% higher, about $80 billion for the quarter. And so that is a positive indicator for the tech trade. We've seen that rout plague the markets over the past couple of days ahead of the earnings season. But speaking of all of these things happening, Asian equities are trading sideways. Now, they were gaining early in the session. They then reversed those gains, and now they're pretty much flat. We're keeping an eye on the Kospi. We're keeping an eye on SK Hynix ahead of its ADR listing in the United States. We're also keeping an eye on Samsung raising some prices for its chips. And then Brent crude is lower, 0.3% lower today. We keep an eye out on those shipments through the Strait of Hormuz. We were speaking to Stephen, our colleague covering energy earlier, telling us that, yes, shipments are going through, but not to pre-war levels. And then we're also keeping an eye out on the yield on the 10-year treasuries in the United States, 2 basis points higher, about 2 basis points higher. Obviously keeping an eye out on what Kevin Warsh decides to do for the remainder of the year. And that brings me to the chart we're taking a look at today. If we flip the board, we take a look at the break-even chart here. And this is a monumental level. This is put out by our colleagues in markets. They point out that Kevin Warsh is already winning when it comes to one key indicator on strength of inflation messaging, and that is short-end break-evens. And this is what you're seeing here, falling below 2% on the 2-year break-even. And this is noteworthy because it is the bottom of a 5-year range, and it's happening in the midst of this boom, this overall boom that we're seeing in stocks and tech investment, despite the rout that we've seen over the past couple of weeks. And now with the U.S. market in flux from the impact of AI and the energy crisis stemming out of the Middle East, rapidly being left in the review mirror, this is what our colleagues point out. We should watch this rate for a sign that a cut may come back in the Fed's playbook later this year. So a cool chart that we were taking a look at earlier this morning. Now, for what has happened over the past 30 minutes in Asian equities, we've got Avril Hong in our Singapore studio for us. Avril, what do you have for us?
Yeah, we're seeing Asia's stock gauge is looking pretty flat, as you highlighted earlier, on a day where I think investors are still concerned of the AI rally and the extent in which it has gone too far. So there is a bit of consolidation ahead of earnings. Of course, we have Samsung tomorrow, and this is a stock that has climbed, 150+% so far this year. And then investors also gauging things from the SK Hynix US ADRs on Friday. And amid all this, also worth highlighting that for the likes of Hon Hai, despite the beat on revenues, the gains today are looking pretty marginal as well. Now, we talked through earlier what Goldman's call is on dollar yen. It's easy at 165 in a year's time, so more bearish than the previous forecast. I would also just highlight that some of our colleagues on the MLive team, including Mark Cranfield, have spoken about today's bond buying operation out of Japan, and this comes ahead of tomorrow's study or auction. There is a bit of a negative signal from that, so that could set up a negative feedback loop in itself. That's something else that we'll be watching on the macro front ahead of all these, aside from all these tech things as well in the region.
All right, Avril Hong in Singapore, thank you as always. Now, we're also tracking the Middle East credit markets, which have staged a recovery since the Iran war, with spreads tightening sharply and primary issuance rebounding faster than many expected. Joining us now to discuss this is Zeina, Rizk, co-head of fixed income at Amwal Capital Partners. Zeina, good to have you on set with us this morning. We've seen resilience in spreads, even throughout the war, really, but afterwards especially. Do you think that markets are mispricing this good news?
Good question. I think there has been complacency from the beginning. So when the war started, we did have a widening across the board, but the widening just got us back to the levels we were at around the tariff, around the Liberation Day, except for the real estate sector. And after that, even as you correctly mentioned, through like halfway through the war, we started seeing the recovery. And now, in mostly, we're at spreads tighter than what we were before for sovereigns, banks, and bank subs. Real estate are still a bit wider. Yeah. So the simple answer is yes, we are being a bit complacent still.
And Zeina, if we were to bring geopolitics to the table again, the risk is still very much there. If we're going into a period of structurally higher geopolitical risk, what do you think are the biggest macro factors that investors should be looking at? Is it debt, worries when it comes to debt, or currencies? What would it be?
I mean, the answer would have been, and this is what we were afraid of when the war started, was this pricing in this geopolitical risk on additional spread, which would be oil prices. Will the trade, will we have the Strait of Hormuz opening and closing for the foreseeable future? All of these should factor into higher spread, which would mean higher cost of debt. But the reality is, on the ground, the markets are completely disregarding this, and we don't even have the geopolitical spreads coming onto either cost of debt or the spreads.
One thing that a lot of people think about that hasn't posed a risk as of yet, but it's something on a lot of people's minds, is the USD peg in the region. Now, that's a question that comes into light whenever these geopolitical situations flood up. But if we see a Fed pivot, but a divergence when it comes to economic growth in the region, do you think that poses a risk to the USD peg?
We have been talking about it a lot. I think the depegging is more political than actual financials at this point. And I don't see a reason why we would go into such a big decision unless markets really point into that. And I think we're very far from that at this point.
And when it comes to Egypt, I also want to pivot to Egypt because you point out that your base case scenario for the next meeting by the central bank is to hold rates and possibly throughout the remainder of the year. Now, the IMF program expiring soon. Are we going to see a return to fundamentals in Egypt?
Absolutely. So the government pointed that they are not looking to renew an IMF program, which brings us back to looking at the fiscal. The debt level, the debt stack in Egypt is still significant. We still have high dependence on external funding, and we still have close to 20 to 25% of debt that is secured on the balance sheet. So we will need to see fiscal discipline. We will need to see fiscal discipline specifically when it comes to the energy bill for them to be able to have to continue with the debt sustainability, because also the debt burden is the interest rate burden is significant. So overall, we are comfortable with the fundamentals, but I think that those questions come back into play now that the IMF is out and the government is on their own. They have had a good run. Fundamentals of Egypt are good. Valuations reflect that. I don't think there's somewhere we can go from here. But overall, the fundamentals are good. But yes, we do focus on that right now.
And now Egypt is obviously an oil importer, but I also want to focus back on the oil exporters of the region. With the energy crisis sort of easing and we're seeing oil prices at around $70, $71 a barrel, what is the impact of that going forward, or at least over the next 6 months, on these countries' balance sheets, but certainly on their fiscal position as well?
So, obviously higher oil is positive for the region, no need to say that. But the thing is, the higher oil did not really reflect into higher revenues for all the countries because the strait was closed. So most of these countries could not export oil at these levels. So this is controversial. This is why oil coming back at 70, but exports coming out, export being able to come out, kind of balances this. Right. And if we stay at 70, I think we should be fine. We started the year pre-war at these levels. So it's more of the trend and where do we end from here. So if we drop to 50 and we stay there, yes, this is going to raise questions, or even 60 levels. But if we stay at these levels, I think that markets already discounted that pre-war and we were comfortable with that.
Yeah, and like pointing out also that a lot of big banks have said that their average price estimates for Brent by the end of this year would be 70, 75. So we're expected to be around those levels. But just finally, we touched on the Fed, Zeina. What do you think the Fed would do, and what impact would that have on regional spreads?
The base case is the Fed will stay on hold. Okay. So the last speech of Kevin Walsh was very much seen as distinctively hawkish, which got the market to discount two hikes this year, with causing a massive bear flattening. I think it's a bit overdone. The base case is that the Fed will remain on hold, even though inflation has eased. But if you look at the latest job number, and I mean, we have a resolution here, but the resolution is not sustainable or might not be sustainable. So I think the base case is that the Fed would remain on hold until there's more clarity.
Okay, so not a contrarian view there, Zeina. Fed on hold.
Absolutely.
All right, thank you so much for your time. Pleasure, as always. Zeina is co-head of fixed income at Amwal Capital Partners. Now, coming up, Abu Dhabi is set to take on an $81 billion giant on its stock market private. We'll discuss the details on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. We're now turning to Abu Dhabi, which has spent years building one of the Gulf's fastest growing stock markets through a wave of blockbuster IPOs, only to now take one of its biggest companies private. A unit of the newly created sovereign wealth fund Limad is moving to buy out minority investors in Abu Dhabi National Energy Company, or TAQA, the $81 billion utility giant. For more on the deal, we're now joined by Bloomberg's Middle East Equity Capital Markets reporter, Laura Gardner-Cuesta. Laura, good to have you on twice in less than a week. It's an honor. Why has this happened?
So I think it's better understood as part of like the broader Abu Dhabi restructuring that's happening, right? With the creation of Limad, the new sovereign wealth fund under the Crown Prince, it's been absorbing a lot of the key assets, so ADQ, Etihad, Abu Dhabi Ports, and now TAQA. And I think what this gives them is more flexibility to be able to pursue deals under TAQA, which is obviously like a key strategic utility, without the scrutiny of public markets. And I think the point about capital markets development, at this point, there's only less than 2% of TAQA that's listed. So it's really such a small free flow. It's tightly held stock. So I think it's less meaningful than, you know, if you delisted like an ADNOC drilling or something like that.
Yeah, of course. But does this speak to a wider trend that we might see, or is it a one-off?
So I think there's not been an indication. Obviously, like it's a huge company that they're taking private, right? So we shouldn't ignore that. But I think from Abu Dhabi's perspective, they haven't really indicated that there's a change in their strategy, right? In fact, over the past few years, they've been listing a number of companies that are also strategic, like a lot of the ADNOC units. They've actually also been doing follow-ons. So they've been very conscious about getting a lot of these stocks in the index, so increasing the free float, getting more analyst coverage, very conscious about investor relations. This year has been quite slow in equity capital markets, understandably so, because obviously we've got the conflict and everything. So, but I think from, at least from what Abu Dhabi has signaled, there's no change in strategy. One final point I'd say is that market participants have been saying that there's still some work to do, not just like in the stock exchange, but in the Gulf in general. I think there's a lot of companies that still have quite small free floats. And again, like perhaps like more analyst coverage could be done in some of these stocks. But overall, I think this doesn't necessarily indicate a wave of delistings now.
Okay. Laura, last week you mentioned to me that you guys are pretty busy at the desk. Now, we haven't seen the same amount of IPOs flood the market as we had in previous years for the reasons you rightfully have just mentioned. But without divulging too much about the work that you do, what is the expectation for ECM activity in the region over the next 6 months?
So this first half of the year has been extremely slow. We did have one big IPO from Oman that priced last week. Will list likely this week. But we spoke to a few bankers who've told us, despite the slow start, despite the slow start, there's still an expectation, and companies are getting ready. There's a few companies in Saudi that are getting ready for IPOs. And I think it's just a question of, you need a bit more stability, but the pipeline is still there. We've also got some companies in like quieter markets like Qatar and Kuwait that are getting ready to list. But I think everyone wants to see like the first big deal do well and trade well, and then that will probably reopen.
Yeah, and you'll be covering that for us. All right. Laura Gardner-Requesta, our ECM reporter. Now, for a look at some of the other stories we're following, Bloomberg has learned that the United Arab Emirates state energy giant ADNOC is reviewing its financial advisory relationships and has invited around 10 Wall Street investment banks to pitch. The move intensifies competition among top deal makers as ADNOC ramps up its $150 billion global investment drive, particularly focusing on U.S. liquefied natural gas and chemical acquisitions. The UAE's Cybersecurity Council says it successfully thwarted a series of sophisticated cyber attacks targeting entities in the financial sector. The Emirati state-run WAM news agency reported that the attacks included sophisticated phishing campaigns, exploited security vulnerabilities, and deployed malicious software. It says attackers are increasingly using AI to develop more advanced and complex techniques. And airlines in the Persian Gulf are looking to obtain earlier delivery slots for Boeing and Airbus aircraft that may be freed up as Air India discusses potentially deferring some orders. Bloomberg has learned carriers including Etihad Airways and Saudia are in talks with the plane makers to obtain deliveries as early as 2029 and 2030. Now, coming up, President Trump is traveling to the NATO summit in Turkey to confront wary allies and meet with Ukrainian President Volodymyr Zelenskyy. We'll bring you the details on that meeting next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. President Donald Trump is traveling to a NATO summit in Turkey to confront wary allies and meet with Ukrainian President Volodymyr Zelenskyy about ending the war with Russia. Tensions are high due to friction over European defense spending, the war in Iran, and Trump's persistent interest in acquiring Greenland. Let's head to Ankara, where Paul Wallace, our managing editor for the Middle East and Africa, is standing by. Paul, good to have you on. What can we expect from these talks between President Trump and Zelenskyy?
Hi, Abia. I think those talks will be some of the biggest and most significant that Trump has whilst he's in Turkey. He won't be here for very long. He'll only be in the capital for about 24 hours. But the meeting with Zelenskyy will be crucial. I think Zelenskyy will be wanting reassurance that the U.S. is backing Ukraine and that will continue to also help Europe do what it can to help Ukraine financially. It comes at a pretty pivotal time on the battlefield, arguably. According to our reporting, the US doesn't see either Russia or Ukraine as winning at the moment and sort of sees it as a stalemate. But Ukraine is inflicting a lot of damage on Russian infrastructure, particularly its domestic infrastructure, to the extent that it's causing fuel shortages in Russia. Russia, it does have to be said, is inflicting a lot of damage on Ukrainian cities, including Kiev in the last few days, with continued airstrikes. But I think Zelenskyy will want that reassurance from Trump. He will also want to get his point of view across to Trump, someone who spoke to Vladimir Putin, Russia's president, on Saturday. So I think Zelenskyy will want to get his argument across about what Ukraine needs from this, from any talks that come up, and potentially any sort of peace agreements eventually.
And Paul, just how realistic is it for NATO allies to meet President Trump's defense spending demand of 5% of GDP?
That is going to be very tough for them. To get to 5% of GDP is no mean feat, even if you're talking about 3.5% of GDP being sort of core spending, and then the other 1.5% of GDP sort of being other things that they might already be spending on that could count, or they could say counts as defense spending. It's going to be extremely difficult. If you take a country like the UK, which was one of the better ones in terms of meeting NATO defense spending goals, it's only at about 2.5%. To double that proportion of spending at a time when you, not just in the UK, but across Europe, you've got high debt levels, you've got fiscal problems, is not going to be easy in the slightest. But I think European leaders are certainly going to have to at least show Trump that they're making an effort, because it's something that he's not going to let go of. He really, really does believe and is committed to Europe increasing its share of defense spending to help NATO.
All right. Bloomberg's Paul Wallace in Ankara covering the summit for us. Thank you. Now, some of the other stories we're following today. Andy Burnham is being urged to undertake a wide-ranging overhaul of Britain's sluggish economy. A report by University College London's Institute for Global Prosperity has called for a radical simplification of the tax system to aid growth. Burnham is set to take another step towards replacing outgoing Prime Minister Keir Starmer this week, when Labour MPs begin nominating a successor from Thursday. Billionaire Bernard Arnault and his wife have been ordered to pay $25.7 million in additional taxes. The CEO of the global luxury goods conglomerate LVMH and his wife must pay the extra millions in respect to France's wealth solidarity tax for the years 2012 through 2015. Arnault is France and Europe's richest person, and currently the 8th richest person in the world, with a net worth of about $165 billion. At the FIFA World Cup, star U.S. striker Florian Balogun will be allowed to play the round of 16 game against Belgium later on Monday after having a one-match ban lifted. It's a rare reversal, and Bloomberg's been told it came after President Trump personally called FIFA boss Gianni Infantino following Balogun's red card in the previous game. Belgium's team says it is astonished by FIFA's decision and is reviewing possible options to appeal. Jude Bellingham scored 2 goals 98 seconds apart, and Harry Kane converted a penalty to help England win 3-2 against Mexico at Estadio Azteca. England was down to 10 men after Gerald Quansah was sent off, but Kane's penalty helped the team reach the quarterfinals. England will face Norway on Saturday in Miami Gardens, Florida, for a spot in the semifinals. Now that's it for Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Stick around with us for Daybreak Europe. This is Bloomberg.